Hi dear crypto investors, last week, December 13th, was the last time Satoshi Nakamoto went online 10 years ago. The Bitcoin creator left his last message on a crypto forum exactly on that date. 2 days later, on December 23rd, the physical Bitcoin token and a metal plate engraved with a public address and a private key of its first block will be sent to the moon. The flight will be provided by Astrobotic, which will also deliver a physical wallet with Doge meme coins to the Earth's satellite. Whereas some tokens are the first ever financial assets in space, others encounter earthbound problems, in particular with law enforcement authorities and regulators. This week is memorable because of the successful international operation involving 34 countries. As a result, 3,500 people were detained, including suspects in investment crimes, money laundering, and e-commerce fraud. The operation was carried out under the direction of Interpol and lasted 6 months. Law enforcement officers seized assets amounting to $300 million, 101 million of which were cryptocurrencies. Meanwhile, the standoff between U.S. financial watchdogs and companies which have filed their applications for spot Bitcoin ETFs is still lingering too long. Invesco and Galaxy Digital, the firms willing to launch new offer-based financial instruments, have been notified of a new deadline, so the verdicts will be delayed until February 6th. Besides, Bloomberg reported that last week 4 companies met with officials of the Securities and Exchange Commission regarding permission to open Bitcoin ETFs. Although the head of the commission, Gary Gensler, has acknowledged the impact of court decisions on the process of reviewing applications, none of them have received approval yet. Nevertheless, the crypto community hopes that the authorities have softened their stance on this matter, a good omen that the regulator may give the instrument a green light was an updated version of BlackRock's application. In it, the world's largest asset management company set out a refund mechanism in fiat currency and indicated the ticker of the instrument IBIT, which it plans to list on the NASDAQ exchange. The launch of the new financial instrument will be a landmark event for the crypto market because it will step up the integration of digital assets into the conventional financial system. As an example of such integration, let's discuss the response of digital assets to recent policy decisions of major central banks. First and foremost, the Federal Reserve's announcements on the funds rate. A dovish statement on the Fed's chairman last Wednesday propelled growth of both stocks and cryptocurrencies. Their market quotes, denominated in the US dollar, tasted one-week highs. Though the greenback did not climb above 102.3 in the last 7 days, popular tokens did not take advantage of the situation in full. As traders were anticipating the imminent appearance of spot crypto funds in the US, the shift in the deadline for their consideration to January forced traders to sell part of the cryptocurrency they had accumulated. Therefore, the price of Bitcoin fell to $40,611 earlier this week. Besides, this downward correction can be explained by record high commissions in the blockchain. For example, on December 17th, more than 383,000 unconfirmed transactions were recorded and the commission exceeded $40. This situation, as expected, triggered a flurry of comments and discussions on social networks. Therefore, after 8 weeks of growth, Bitcoin stumbled and retreated, but its fall did not last long, as the coins dumped by speculators were quickly bought up by whales. Holders of wallets with a balance of 1,000 Bitcoins began to buy coins and thereby prevented the strong drawdown that endangered Bitcoin this week. According to the Whale Map platform, on December 18th, the number of large transactions worth $1 million and above increased in the network. Later on, the flagship crypto again regained its footing. By Wednesday evening, Bitcoin was able to break through the critical round resistance of $44,000 per coin. All in all, over the past 7 days, the main crypto has risen by almost 5%. Ether did not develop a rapid rally in the last 7 days. The second largest crypto went up from $2,130 to $2,325. The token traded at the upper border on late Friday, though the weekly chart indicated Ether's intention to assert strength. Yesterday, the token remains in the bear trend. On the other hand, the level of 2,160 serves as key support. A crypto analytical tracker into the block says for the time being it contains about 5.58 wallets which store more than 39 million Ether tokens. Hence, it's possible that the price is going to rebound. The upward target coincides with the resistance of $3,000. While Ether is going to conquer new peaks, Solana is declared the undisputed leader in terms of its rally in the top 10 tokens. In the recent 7 days, this token surged from $67 to $84, having appreciated by 23%. This blockchain with new projects arouses avid interest among market participants. For instance, Google searches for Solana have skyrocketed by 250% in the past 2 months. The fact is that the company recently began actively selling Solana Saga smartphones. New gadgets have built-in wallets, and sellers promise their owners free bonk tokens. As a result, all gadgets were sold out in the US. On secondary sale, their price is 10 times higher than the original one. The Solana bonk meme coins themselves have spiked by 10,000% over the past 2 months, as they were listed on the Binance and Coinbase crypto exchanges. On the wave of popularity yesterday morning, Solana, whose nickname is the Killer of Ether, found a new victim. It has overtaken the Ripple native token to become the 5th largest cryptocurrency by market capitalization. Ripple's weekly growth was much more modest, about 1.7%, and its price range most of the time was consolidating within the range of $0.587 to $0.644. However, a Ripple could jump by almost 15% in the near future as Ripple Labs expands its reach as a cross-border money transfer provider. Earlier this year, it received a license in Singapore and Dubai, and recently Ripple received permission to operate as a digital asset provider in Ireland. The company plans to expand services to clients throughout the Eurozone. Its CEO, Brad Garlinghouse, announced the firm's decision to support candidates loyal to digital assets during the US presidential election. The native Avalanche token also extended its rally, although at a slower pace. Over the past 7 days, it has added more than 14%. Moreover, it has already rallied by 104.3% this month. The chart shows that after the jump above $45, the AVAX crypto went through a downward correction. The fact is that, unlike Ether, the entire fee is burnt in the Avalanche network, while the Ethereum network burns only a percentage of transaction processing fees. The past 7 days, the period turned out to be extraordinary. A volume of coins worth $18 million was burned. Besides, the volume of commissions burnt on the network has increased more than 10 times from a week ago. Therefore, Avalanche tested multi-month highs. Its weekly time frame was very wide, within the borders between 37.4 and 45.4. Oftentimes, cryptocurrencies catch investors off guard. Our analysts keep you updated on all developments in the highly volatile crypto market. Check InstaForex TV channel for news. Our crypto review is over. Leave your comments and ask any questions. See you online in a week on December 28th.